FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to the Financial Survival Network. I'm Kerry Lutz. It's January 23rd, 2018. Well, economies will come and go, but inflation is here for the duration. As long as there's money, there's going to be inflation, and now we're seeing a reflation. Well, first, as always, email us, kl@kerrylutz.com. Be part of the show. And so this reflation theme, it's emerging now. You're looking at commodities going up, gold going up, oil at nearly $65 a barrel as of today. What can we look forward to with reflation? Well, our good friend Jordan Goodman is with us now, moneyanswers.com. Jordan, welcome back.
Great to be with you in 2018, Kerry.
Hey, so reflation, that's your buzzword.
That's my theme. That's right. And it's very different. I mean, you think 10 years ago in 2008, when the economy was falling apart and homes were falling, we were worried about deflation, right? And prices falling of commodities and real estate falling and the stock market falling and everything. Now we're 10 years later, the exact opposite. I think we're seeing, as you said, commodity prices are up. The stock market's been soaring. Interest rates are rising. Oil prices are up. Housing values are going up. I think we're in a reflationary situation, which has got some benefits. It makes people wealthier, but ultimately inflation can be kind of insidious. And officially inflation is low, but I think in people's real world, inflation is a lot higher than the official 2% or so. If you see what's happening to healthcare or college tuitions, or closing costs on a mortgage, all kinds of things are higher than they have been in the past. So it's been kind of creeping up on us. But I think that's what I want to talk about today, both as a consumer and investor, how to profit from the reflation trade.
Yeah, and you raise a great point. I don't know about you. When was the last time your health insurance premium went down? When was the last time your auto insurance went down? And food prices, they've been going up. At least it seems to me they have. Certainly, if you're into eating steak or
healthier things, organic is more expensive than non-organic. I mean, January 1st, my health insurance premium went up $200 a month, and the deductible went from $5,000 to $7,500. It's one of the few consumer products where you pay more and you get less, basically. So. And it's going to continue that way. I mean, with what happened as part of the tax bill at the end of last year and taking away the individual mandate, I think a lot of people are going to drop health insurance because they can't afford it where the premiums have gone, which means that the pool of insured people shrinks to the people who are older and sicker, which means the cost for health insurance companies go up, which means they have to raise premiums even faster. This is what they talk about, the death spiral. And what happened was snuck into the tax bill almost as an incidental thing. Getting rid of that mandate is going to accelerate the death spiral. That's why you're going to see premiums going up, healthcare costs going up, being borne by a smaller and smaller pool. And that's why the whole thing ultimately collapsed.
Yeah. Well, what a difference a decade makes, right?
Absolutely. Yeah. Now, one area in particular, I don't think a lot of people have really noticed it, but interest rates are moving, pretty readily up on a regular basis here, Kerry. I mean, the long treasury, which last year got down below 2% at a certain point, 10-year treasury, is now up to about 2.6, 2.7, something like that. I would say on its way to 3. Now, you could say it's for good reasons because the economy is growing. There's more loan demand. We also do have a bit of a deficit in this country, like $20 trillion or so. Nobody seems to notice. But I think that changes people's behavior when interest rates go up, when they've been so quiescent for so long. And now that's long-term rates. Short-term rates, which the Federal Reserve does control, they raised rates 3 times in 2017. I think they'll raise them at least 3, if not 4 times in 2018. So that means that what people are paying for loans, anything tied to the prime rate, credit cards, student loans, car loans, small business loans, all those are going up based on the prime. But what people are earning on deposits, on savings accounts, on CDs, on money market funds is not going up. Okay, the banks are doing a great job at padding their profit margins here, but it's not really fair for interest rates to go up and depositors not to receive any benefit. But that's, in fact, what's happening here.
Yeah. So what are you supposed to do about it? It's like, I remember this old McDonald's commercial a long time ago where the kid goes, "Daddy, what's inflation?" And he goes, "Son, that's when the price of everything goes up, but your daddy's salary stays the same."
Exactly.
Right?
Well, this is what's happening to savers today. It really is. So what it means is you got to do alternatives. And I'll tell you what I'm doing. It's something I'm very much involved in, are what are called secured real estate income funds, because that's a way of earning an 8% yield without any market fluctuation over a 1-year time frame. You get monthly checks. You can either take them or reinvest them back into the fund. And now you're earning a yield much higher without having the volatility of bonds. A website for that is securedrealestatefunds.com. They've also got a phone number, 888-444-2102. And this is one of these so-called Regulation A-plus funds, which came on when the Jobs Act was passed in 2012, allowing in effect kind of crowdfunding. Think of it that way. Mm-hmm. So this is something that in the past would have only been available to $100 million pension funds or big institutions. Now the average person can get into it for a minimum of $5,000. There are no commissions involved, so you invest $5,000 and that full amount gets the 8%. And to have your money compounding at 8% without having market fluctuations is a good thing in this environment. And basically what they're doing, Kerry, is they are lending short-term, like 1 year or so, to commercial real estate projects. Yeah. Apartment buildings, medical offices, assisted living, student housing, retail, whatever it may be. And those people are still having a hard time getting commercial mortgages because the banks are still so tight because of Dodd-Frank. And so instead of playing with the bank for a year and then getting rejected, they go to a fund like this, use the money to renovate or improve their commercial property. And in fact, because they're willing to move faster, they actually give the fund shareholders a piece of the profits when the project is actually sold at a profit. Oh, so there may be another 1 or 2 points on top of that 8%, kind of what they call profit sharing distribution, once a quarter or something like that. So that's what I'm doing is earning 8% while everybody else is sitting in the bank earning 0. And I think people in bonds don't realize the risk they're taking. If you're in an individual bond or a bond mutual fund, either directly or through your 401k, say interest rates go the long treasuries from 2.7 now to 3%. Doesn't sound like much. You could lose 5, 10%, depending on what it may be. In principle, you're going to lose a lot more in principal than you're earning in the 2.5% interest. And so a lot of people in bonds don't realize the risk they're taking. That's a solution that I think might be helpful to people. Again, the website, securedrealestatefunds.com.
Hey, and, bonds can easily turn into bombs, as we saw happen in the 70s. And I assume that none of these funds are putting up new shopping centers, trying to entice Macy's or Nordstrom's. That would not be a good business strategy. to open new stores in a declining market.
I don't think we need too much of that, no. Typically what they're doing is renovating existing properties to add value in some way. I'll just give you an example of a project I know they did recently. There was a guy that had a big house in a college town. I think it was Boulder, Colorado. He'd been renting it out to 2 students forever. He got a loan from the fund, renovated the house, and a year later, he had 4 apartments instead of 2 in the same house, doubling his income, the value of the house going up 50% or whatever. So he's willing to pay 10% or so for a year to double his cash flow and improve the value of his house dramatically. So it has nothing to do with what's happening in Boulder real estate. What he did to the real estate made it go up in value.
Yeah, it was what you call a value add in the trade.
They call it forced appreciation. That's the term that they use.
Exactly. So hey, what about all our bubbles, Jordan?
I think we've got a lot of bubbles
still alive and well.
The bond market could be a bubble, actually.
And student loans and auto loans, we've been talking about these for years. Right. And they just keep, and credit cards again have become.
So credit cards went over $1 trillion. We had a huge Christmas spending season, 5% overall growth, but 18% growth online on his holiday spending. And now the bills are coming in. When we get the numbers, I think we're going to have added over $50 billion in new credit card debt during the holiday season alone, because credit is available. It's expensive, but it's easy to get. And it's like handing people the noose to hang themselves with. And you hand an American a noose and they'll put it around your neck and hang themselves. Yeah, well, they're used to doing it. They haven't learned from the past situation, unfortunately.
Well, on the other hand, we talked about this. You were Mr. Optimism after Trump got elected. Then you took a little bit, you became a little less optimistic, a little less bubbly, because you weren't sure if he was going to get stuff through. And yet now, the economy is looking better, Jordan, than it has in a decade. Trump.
Well, it was amazing. He got the tax bill through. We weren't sure it was going to happen. It was some kind of a day-to-day thing, but he did get it through ultimately.
I told you it would happen. They had to do something.
You did indeed, and you were right.
because it became a choice of doing something or not getting elected. Not getting reelected.
It was done with the narrowest of margins and in a completely partisan way. So if something goes wrong, Republicans own it completely, just as Obamacare was owned by the Democrats completely because there was zero Republican cooperation. It's the same kind of thing. I wish we had more bipartisanship in government and got things done, but things seem to be going, if anything, more partisan each direction.
I think, what's interesting? The Republicans were, for 8 years, helpless to do anything to stop the Obama juggernaut. They could do nothing to stop it. They were totally ineffectual. Even when they took back the House and then the Senate, they were completely ineffectual. And now it's gone totally reverse. The Democrats, the first year there was a lot of garbage going on, but they really have been powerless to stop the Trump train. It's like getting out.
And then they tried with the government shutdown, and that basically blew up in their faces. That did not work. That was the Democrats asserting their authority, and it did not work. And they caved in pretty quickly over the Dreamers. It was very ironic that you're going to shut the entire government down to defend illegal immigrants into this country.
That sounds totally logical if you're a Democrat or a collectivist. But I would aver, and we will find out soon enough, this was a watershed for the Democrats. It's all downhill for them now. I don't believe they're going to take back either house in the upcoming elections. And I'll go out on a limb and say that. But more importantly, they will be powerless now to resist the Trump agenda. They'll nip at it on the margins, on the edges. They're just going to be like the Republicans were a very short while ago.
If the economy continues to be as strong as it is and the markets keep doing well and people start seeing the benefits in their paychecks, which they're going to start doing quite soon, that's going to be very powerful for the Republicans, actually showing them in their paychecks. When you get those tax withholding tables changed in February and people actually take home more money, on top of all these companies, today, I think it was JP Morgan Chase had wage increases for tens of thousands of people. Walmart did. You had these bonuses from Federal Express and Wells Fargo and one company after another. They're not just buying back stock and raising dividends. Some companies are doing that, but a lot of them are investing back in the business. Verizon, just one company after another is doing it. So that, I think, is going to have some real impact if that money starts circulating in the private sector. And kind of it's the self-reinforcing. In the stock market, they call it the positive wealth effect. When the market goes up, people feel wealthier and they spend more money and makes the market go up. In this economy, it's the same thing. When people get more income, they do good things with it. They spend it, they pay down debt, they save it, they invest it, all things in the private sector. And this is kind of a positive, virtuous cycle, I guess you might say. So you're right. I think by the time we get to November, you're going to have seen a lot of that already filtering through its economy. And the Democrats basically poo-poo it. Oh, you're just getting crumbs. You tell the Walmart guy just got $1,000 bonus if that's crumbs. Okay. It was very, very elitist, I guess you might say, to say something like that.
You could say that. Hey, well, there are losers on the tax bill. They're mostly in your state, my former home state of New York, California, New Jersey, Connecticut.
You're
Illinois.
already seeing it.
Yeah.
I'm in Westchester, New York, which is one of the highest property taxes.
The highest.
High income tax.
The highest.
In New York State. And I think it's going to be much harder to sell a home in this parts. And the same in California, because the after-tax cost of housing just went up significantly. If your property taxes and income taxes, state income taxes combined are totaling $10,000 deduction, a lot of people with way, way more than that, $20,000, $30,000, $50,000 in property taxes not being deductible. That means that you're going to have a lot more money to afford these homes. And I think there's a lot fewer buyers who want to take on that deal. So yes, it is going to depress housing prices in the high property tax states as well.
And this is a place where the Democrats totally disserved their constituents, because if they had negotiated, sat down at the table, they probably could have gotten that up to 20 or 25,000.
Yeah.
And they blew it. And
they weren't at the table. They weren't even there.
They blew it.
They weren't participating at all. And that's what happened to their constituents, correct?
Yeah. Hey, just a note about effective tax rates. There's 7 of the Dow Jones Industrials, DJIA, paid less than 21% effective tax rate. You know who they are, the GEs of the world.
Yes.
But then there's 23 that paid well in excess of that. Some of them paid 40+%. Just looking at the effective tax rate for Verizon, third quarter 2017, it was 32.21%. In June 30th of 2017, it was 35. So they're paying heavy capital companies paid enormous tax rates. And now, you take off 12-13% of that, and that is a huge profit for them. I mean, it is amazing. AT&T, same deal. Oil companies pay huge taxes, believe it or not. A lot of different companies that you wouldn't think paid that much in taxes paid big taxes. Apple is kind of unaffected by it, but
well, Apple had a lot of money overseas, $250 billion overseas. They're bringing it back, paying a $38 billion tax bill, the largest tax ever paid by any organization.
Yeah.
But they're going to reinvest the other $200 billion or so, create a new headquarters, hire 20,000 people, create new research and development, manufacturing facilities. I mean, this is exactly what people said would happen if you had this repatriation of this money from overseas. And you're seeing it in company after company. I mean, Apple was probably the biggest one, but that's very, very positive for the U.S. economy to have that. One of the biggest problems we got right now, Carrie, is we don't have enough workers, to handle all of this investment going on here. And then if we get an infrastructure bill on top of that, I don't know where the workers are going to come from to build all these roads and bridges that we're talking about here.
We're going to get an infrastructure bill because now the Democrats see they've been totally left out of the party. And
well, they want one. But again, say you pass this, say you have a $1 trillion infrastructure bill and do public-private partnerships, do you think we have the labor to implement it? I don't think we do. We have to, and we're restricting immigration as well. So that's a bottleneck in the economy right now.
Once all those drivers are freed, professional drivers are freed from their by the self-driving trucks.
That's true. True.
And cars will have the people, but that's not for a while. The U6 unemployment rate, which is more real than the U1, is close to 8%. So there's still progress to be made here.
There are people out there, but they're not trained. There's what's called the JOLTS report, which is the job openings long-term survey. 6 million people, 6 million jobs exist without the people qualified to take them. So that's a huge difference the marketplace is not filling them right now because people don't have the training to do computer coding and plumbing
web
and
design,
electrical and all kinds of things. So if some politician could figure that one out, we'd get our unemployment rate down to 2% because the jobs are there, just the people aren't there that have the training.
Hey, let me give you a perfect for instance. I was at the North American Bitcoin conference in Miami last week. Do you know what a junior Bitcoin blockchain developer gets paid fresh out of getting a certificate or school, whatever?
At least 100,000.
160,000. Do you know what a senior blockchain developer?
I have no idea.
He basically writes his own ticket. And and the big problem is that there's for every developer, a blockchain developer, there are 14 jobs that are unfilled. I mean, talk about huge. And you know what? AI, which right now is really big for big corporations and the government, for NASA. Space Coast here in Florida, AI developers getting $300,000 to $400,000 out of college. Hard to believe.
Yeah, well, that's right. And we're running out of people. We really are. And all these areas, artificial intelligence, 3D printers, cloud computing. I mean, all these things just have huge growth. You see what's happening with Amazon. Whenever they've got their 20 cities now, wherever they land, there's going to be 50,000 new employees. And a lot of them in exactly what we're talking about, doing 3D printing and artificial intelligence and cloud computing. And they're not throwing boxes around warehouses anymore.
No, it's a different world here than you and I grew up in. Really.
Let me give you, by the way, I always like to help the listeners with specifics. There's a fund, an exchange traded fund called the Exponential Technologies Fund. The symbol is XT, and it owns the 200 fastest growing companies in the world in exactly all these technologies. They have biotechnology, robotics, 3D printing, cloud computing, artificial intelligence, everyone we just talked about in one fund. You got them all working for you, and it's global. It's not only U.S., all around the world. So there's a fund, there's a way to invest. And it started a year ago at about $20 a share. Now it's about $37 a share, something like that. So it kind of goes up slowly, but there's a way to play all these trends we just talked about without you having to be an expert in them yourself.
All right. So when you look at what's happening here, and the labor shortage too is also very inflationary, because that will, in theory,
wages
drive up wages, which is what we've been trying to do all this time and haven't been able to, right?
Right.
So it's yet another reason, another feather in the reflation hat.
That's right. That's right. Yeah, and I think that's a good thing to have people's wages go up. Mm-hmm. And companies, if they're providing value, can pass it along to consumers without too much problem. I mean, if people feel they're getting better value, they're willing to pay higher prices. So that's all very positive. You're not getting like the late 70s where we had a kind of wage push inflation.
Stagflation,
You're not getting that kind of situation. And it's not unionized either. It's not like, I'm going to go on strike or if I don't get a higher wage. No, wages are going up because you're providing value that we need that makes sense in the marketplace. It's a much more healthy kind of wage inflation.
Hey, speaking of which, this tax bill is a major blow to unionization in the public sector, because the rest of the country has been subsidizing it. And now the country said no mas.
Exactly. Well, the big difference is all these high tax states, New York, California, Connecticut, New Jersey, all the places we talked about, are going to be under enormous pressure, at least not to raise taxes further or potentially to reduce them both at the state level and at the local level because of property taxes. That is a huge new change because we haven't had that kind of pressure really to lower taxes. And because it's not deductible anymore, people say, wait a minute, you can't raise taxes anymore. You know, I'm already at my limit and my cost just went up dramatically because that's not deductible anymore. So that's going to be a very interesting thing to see how that plays out, this pressure on lowering or at least not increasing taxes at the state and local level.
And this is very consequential. You know, a lot of the things that happen when you pass laws, especially tax laws, are unintended consequences. I think we talked about it before, that this tax bill is going to cost way more than was ever budgeted because everybody's going to be looking to be an entrepreneur and stop being an employee because you're actually getting penalized under the new bill for remaining an employee.
So everybody wants to become a subchapter S or an LLC or a limited partnership or something like that because of the so-called pass-through rules, where the first 20% of your income is tax deductible in effect. So yes, everybody's going to want to become a solopreneur, an entrepreneur, but that's where all the growth is coming from the economy anyway. I mean, big companies, GE is not hiring a lot of people. Okay, it's all done at the medium and small level by these pass-through entities. So I think there's somewhat of a loophole involved in it. But if those companies, those kind of pass-through entities can hold on to more of their money, hire people, use services, that's where you really get a growth multiplier. So I think there's an impact to it. I agree that the government's going to get less revenue from it, but hopefully it'll have a positive impact on the economy as well, because that's where the hiring is really going on.
Yeah, and then you look overseas, companies that inverted, got out of here, and other companies, foreign companies, putting money in because, you know, the U.S. has low-cost energy, abundance of water, which is a big factor.
Yes.
There's a city, I'm trying to remember what city it was, that they said is only got a 90-day supply of water left.
In Europe, this is? You mean?
Yeah, I think it was in Europe or in Asia.
Can you reinvert? Is that a word?
Yeah, well, it's going to be one.
When you had companies respond to initiatives and to incentives one way or the other. So when you had a 35% tax rate here and Ireland 12%, they're going to move to Ireland, which is what they did. Now, we're not as low as that, so I'm not sure there's enough incentive to reinvert, but at least the repatriation is huge. And they've made it so you really have to repatriate within their first 4 years or so, or you lose these special tax benefits. So that's going to be very interesting to see how these companies who take this money back from overseas are going to use it and spend it. And hopefully they'll put it back into their companies, raise wages, increase capital expenditures, and not just do buying back stock and raising dividends. Although I think they're going to do some of that. And that's clearly one of the underpinnings of the stock market. It's almost like having a put under your stock. You know, if you know that they're going to be increasing their buybacks, that gives you more confidence the stock's not going to drop very much.
Well, one of the reasons why people don't really like to look at why the whole buyback thing was so in vogue is because the companies had money and they felt that their investment options for the surplus profits, the accumulated profits, just weren't there.
Right.
So then, you know, under pressure to keep your company's earnings going up, what better way than to borrow for next to nothing, take that and use some of your accrued income, take that money, buy up shares, which then has the effect of increasing your profits per share, your earnings per share, and thereby driving up the stock.
And the executives' compensation is tied to the stock price. So they have a real incentive to get the stock up and to get bonuses in stock and all that. So it's a positive cycle. And these are not bad things. I mean, if they raise dividends, that's putting more money in people's pockets. If they raise share prices by buying back stock, that increases the whole wealth. I mean, we've added over $6 trillion in market value since Trump was elected. That's real money. That is actually, people are worth $6 trillion more than they were before. That's a positive thing, and they're going to spend some of it. So it's creating all these virtuous cycles. Who would have thought all this would have happened when Trump got elected? People thought the world was going to fall apart. So those are all good. The only thing I'm worried about, well, two geopolitical events, is some kind of a North Korean accident. So let's hope that doesn't happen. Yeah. And then something in the Middle East. I mean, things are really getting tense, particularly when Trump said Jerusalem's going to be where the embassy is going to be, and the protests, and the Kurds are fighting the Turks and the Iranians and the Iraqis and the Saudis, and it's just a very, very volatile situation there. I hope something doesn't blow up there either. Those are the two kind of geopolitical events I'm looking for. Hopefully that will not blow up, but that could ruin the party if we get a major Middle East war, or certainly if we get even conventional, if not nuclear war in North Korea.
Yeah.
Hopefully those won't happen. At the moment, everybody's kumbaya. We got the North and South Koreans are going to have their teams together at the Olympics. It's all going to be a wonderful moment. Let's hope that lasts a little bit.
Yeah, well, but we just don't know what's going to happen with that. That is one of those known unknowns,
right,
as Rumsfeld would have called it.
That's right.
But overall, we made it through the past 8 years. We'll probably make it through another 8 years. Something will happen, but hopefully it'll be contained. Anyway, Jordan, best place to find you?
Moneyanswers.com. I get emails from you folks all the time. Glad to help them. This is a new economy now to be working with, a reflation economy, and hopefully we've helped people with what we've talked about here.
Yeah, the new economy. And as always, be part of the show. Email us, kl@kerrylutz.com. The Twitter feed's @KerryLutz, and the Facebook page, Financial Survival Network. Don't forget, we've published our cryptocurrency white paper. Just send an email, kl@kerrylutz.com. Put white paper in the subject line, and next day or so, we will shoot it out to you. Jordan, always a pleasure. And hey, we'll touch base next month and see what's going on.
Thanks so much, Kerry. Appreciate it.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.